Hello everybody, and once again welcome to Synonomics, the money machine. Today I'm going to talk about the investment mantras, the 5 investment mantras today. But hey, you must be thinking, what's new about it? There has been plenty of them floating around, and some of them are also from the market masters. But yes, it's quite different today. I'm going to talk about not about the finance acumen, but more about the neuro-finance or the neuro-investing. Yes, you heard that right. Neuro-investing or neuro-finance. And that's the area where it's actually growing. And basically, when you analyze many of the successful investors, you will find that the way they think and the way they approach things in a little bit different way is basically the main reason for their success. Well, without further ado, let's talk about it. So first of all, is basically to know yourself and your mental models. I have actually talked about the mental models pretty much in my previous meditation videos. So if you have not looked at it, I'll recommend you to please go through that and have a look. Because that forms the foundation of any investment decision and the investment success, of course. The first of all, we need to understand and also accept who are we. Who are you in this case? Are you an investor? Are you a trader? Or you think that none of that fits you? Since you are watching this video, definitely I'll assume that it will fit you either as an investor or as a trader. I'll not go into the further details of that because investing can be day trading and it can be like a swing trading. It can be long-term investment, short-term investment, etc. Again, investment can be of multiple things. It can be the stock investment, it can be property investment, it can be crypto, which is in big fashion nowadays. It can be also to do with antiques. Yeah? So in nutshell, we need to understand who are we, what's our style, where we are comfortable. Am I an investor or can I be a trader? That doesn't mean that we cannot change, and I'll talk about it a bit later. But the most important thing is the basic trait, the basic behavior is something that we need to understand where we are comfortable, and that way we can actually make more progress. The most important thing to understand is basically investment is a mind game. Yes, you heard that right. It's a mind game, guys. Know how your brain is wired. And in fact, I have also released a video on how to rewire your brain. We'll talk a little bit of that again today in the finance context or investment context. So you need to understand how your brain is wired, and do you really need to rewire it, or you can manage it the way it is. And in order to rewire that, can you do it? All those questions are there to ask yourself. And that's what we'll discuss. The importance of the mental setup or the power of the subconscious brain has been well recognized. Psycho-cybernetics, neuro-finance, neuro-investing, etc. are the buzzwords nowadays. Having said that, they are not very popular. Not everybody knows and understands it, let alone use it. So I'm going to introduce you to the neuro-finance and neuro-investing today as part of the mantras of investment, and going forward I'll actually build on that. So neuro-finance is an emerging field of research which aims at improving the micro foundation of the financial decisions through the exploitation of the interdisciplinary approach that merges economics, neuroscience and psychology. Yes, it's kind of a blend of the three: economics, neuroscience and psychology. And finance, of course, is the baseline. So you can say it's basically a mix of 4 of them: finance, economics, neuroscience and psychology. With that, I'll also like to introduce you to another term called neuro-investing. With neuro-investing, you can change the way you think in order to change the way you invest. Yes, you heard that right. It actually offers that there are multiple elements that affect investors' decision making and reveals how investors can rewire their brain to make better investment decisions for better returns. When it comes to investing, how you think has a huge impact on how you invest. Based on the real science on how people think, neuro-investing actually offers every investor a chance to change the way they invest by changing the way they think. So guys, you can see that it's pretty much linked with the mental model, the way you think and how your subconscious brain works. If you look at the investment philosophies of the great money masters, so you will see that the investment philosophy evolves based on the personal experience. Look at the investment philosophies of the great money masters like Warren Buffett, for an example. Warren was born in a classical mid-America, well-to-do family. His father was quite prosperous. He had a nice house, and so he believed life is going to be great. He has talked about it in many of the cases. He also said that I've been very lucky. Had I been born somewhere in the African jungles, some animal would have eaten me. So anyway, jokes aside, if you look at George Soros for an example, George Soros actually escaped the Holocaust. Yes. His dad was able to escape with his kids, and that actually formed the basis of his philosophy, which is called reflexivity theory. And what is reflexivity theory? It actually assumes that the markets are constantly in a state of uncertainty and flux, and money is made by discounting the obvious and betting on the unexpected. So pretty much you can see the difference. Warren, on the other hand, because his upbringing was a little bit different, he ended up being an investor. He has a belief in the society, has a belief in the stock market, and he actually thinks that life is pretty cool, is going to be great. If you invest knowingly in good stocks, you are going to be okay. Whereas George Soros, on the other hand, you say he believes in betting on the unexpected. Similarly, Andy Grove, another Hungarian guy, escaped the Stalin and the Hitler. And remember what he has written, the book he has written. Yes, Andy Grove has written the book called Only the Paranoid Survive. So you can actually see, guys, how the upbringing, the personal experience actually forms the basis of the investment philosophies or the investment decision making of even those great investors. Well, let's go to the point number two. And the point number two is also obvious. Know your companies, your business, and your numbers. And this is to do with the finance acumen. You should be knowing your companies, your economic conditions, your business, the business you want to invest in, as well as the numbers. This is pretty much everybody knows about that. It has been talked about it. So I will not take much time to explain that. The only thing I'd like to highlight that take your time to think through what business excites you and what's the story behind that number. Remember, one of the professors in New York, Professor Aswath Damodaran, says that stories without numbers are a fairy tale. Yes, you got it right. Stories without a number is a fairy tale. Well, as I mentioned, take your time to think through what business actually excites you. Stocks, property, crypto, antiques, horse racing. The reason why I'm talking about horse racing is one of my good friends recently developed the investment philosophies and got into investment of horse racing, guys, during the COVID period, and he's doing pretty fine. He's doing extremely good. But can everybody do that? Is my brain wired for that? Is your brain wired for that? Probably not, unless you have been into that for quite some time, since your childhood. So my friend, on the other hand, has been there pretty much since childhood. Even though he was not actively investing and buying horses and working on the horse racing, etc., he did that much later. But that was already in his mind. His grandpa used to take him to the race course, etc. So well, coming back to the other investment instruments like stocks, property, crypto, as well as all these antiques. Many of the investors are into antiques. Can you be? Many of them are into crypto, and many of them are making money. Some are losing money, it doesn't matter. But not everybody will be in the crypto. I am not. So that's something interesting to understand. What excites you? Which kind of business is exciting to you? It's important. It makes life easier. Okay. The other thing, and the most important thing, is also to know your numbers, guys. You have noticed that in my videos I don't share all the P&Ls and the balance sheet and all those numbers actually, because there are plenty of videos out there which actually just scan those numbers and put it there and do a voiceover. That doesn't matter, and that's not going to help you because you have that. In all my videos where I analyze the company's quarterly results or the company's annual result, I actually post the company's results in the description section. I put the link there so you can actually have a look at it. What I want to highlight today is that you should be knowing the numbers of the company you are interested in. If not all, maybe the top 10 investments you have. So the finance metrics and all those things are very, very important to understand. And what are those? Again, there are very few, only 5 of them. One is like market cap. What's the market capitalization of your company? Income or the net revenue? Earning per share, EPS, or the net profit. At the same time, free cash flow, how much cash flow it's generating. And last but not the least, cash in the books, cash and cash equivalents in the balance sheet. If you just know these 5 matrices, you know the company very well. And when the results come, you can actually compare just these 5 parameters. And that will give you inside out story of the company. So that's very important. As I mentioned, I'll not spend much time on that, but just to tell you, you should be knowing your companies or the businesses and the numbers behind that. The third and the most important thing, which actually aligns with what I talked about, is, guys, you have to bring new skills in your investment journey. Yes, you heard that right. You have to add new skills throughout. Read investment methods, fundamental or the technical analysis. New technologies, there has been a lot of new technologies changing right now. Everybody is talking about AI, artificial intelligence, generative AI and whatnot. We're talking about CPU, GPU, and now it's TPU. Let's find out. Please go and find it out. Everything is available nowadays. It's not like 20 years back where you had to go and search in the library and all those. Just put it in the Google and you'll get all kind of articles. If you go to the YouTube, and you'll actually see plenty of videos like this where people will be explaining all those terms to you. So my recommendation is, guys, continuously bring new skills in your investment journey, and that's going to help. Remember, also before I go to that, also remember that you can read a lot about the new ideas, read about the money masters, the one that I talked about. Plus there are plenty of out there who have performed or outperformed the market. Use NLP, neuro-linguistic programming techniques, to pick the brain of these money magnates, the money managers, the money masters, right? Remember, our brain is just like a hard disk. The more data you feed in, the more meaningful analysis it will give you. Actually, this forms the idea, the perception, and also with the facts. And I actually call that generative human AI. Yes, guys, we all talk about generative AI, artificial intelligence, right? I'm talking about the more data you feed in to your brain, you will get pretty much like generative human AI, human eye. That's the better word to say that, right? Human intelligence. So coming back to the point, basically you should read, get data as much as possible through the books, through the YouTube videos, etc., or anywhere you get those information. The more data is in your brain, the better analysis you can do. And that's what, just like the generative AI, the data is basically the new oil for that. The more data the cloud or the system infrastructure has, the generative AI engine or the large language models gets better results. Similarly, the more data you have in your brain, your generative human intelligence will generate more data, more analysis, etc. for you. So let's do that. Again, I'd like to highlight that the brain actually needs almost 20-25 years, guys, to make you a good investor. Yes, I know the young investors may not be very happy to know about it, but guess what? It's not impossible for the young guys to get to that level of diligence, financial acumen and the diligence, but roughly it takes 20-25 years of experience to make you a good investor. And let me throw you some ideas here again. If you look at the Buffett, his success started at the age of 50-51. In fact, he made whatever he has today, 90% of that has been made after his 50 years of age. Remember, in my previous video I also talked about it. His first billion was in the age of 56. So again, if you look at George Soros for an example, again, most of the money he made after 51-52 years of age. Ray Dalio, pretty much 55-56. Jim Simons, 55 plus. So guys, all these celebrated money masters, market gurus have made their fortune after the age of 50. Because our brain really requires 20-25 years of experience, real life experience, personal experiences and all those kind of things, the new skill building, etc., that is required for good investment decisions. Last but not the least, I also like to highlight that when it comes to investment philosophies, you have to choose one. Many of my friends and many of the investors I know who are great investors, they don't believe in any philosophy. They think that we will change according to the market. We'll change according to how the market reacts, how the economy is changing, how the technology is changing. That's also a good way to look at it, guys. If you believe in that, that's also fine. So for them, no philosophy is the best philosophy. And that's what suits you, go ahead with that. But the whole idea is that you have to get the knowledge. You have to get all kind of information about whatever is related to investment. Fourth one is very important as well, because we need to learn asset allocation. Yes, you heard that right. Asset allocation, because that way we can actually construct our portfolio. Remember guys, all the market gurus I have been talking about, none of them have taught us about asset allocation, though they have stressed on the importance of that, but they have not taught us how to make portfolio, how to construct your portfolio. Warren Buffett talks about stock picking, selecting good companies. He talks about circle of competence, talks about the moats, and pretty much it's coming from his guru, Ben Graham. So if you read the Intelligent Investor, you will see that anyway. All these guys talk about how to pick a stock, how to select a company, how to analyze the management, but they don't talk about the asset allocation in the equity portfolio. And that is something we need to understand and learn. Similar is the case for Peter Lynch, for example. One Up on the Wall Street, if you read that, pretty much he talks about how to pick stocks. But he doesn't say how many portfolio stocks should be there. Basically, they don't talk much about the asset allocation, which is very, very crucial for a good investment decisions. Well, let me give you my take here. Depending on the country you live in, you should have your portfolio built. For an example, if you're living in an advanced country like USA, UK, Australia, etc., you can have a concentrated portfolio, guys, of 10 stocks, 15 stocks maximum. You can have millions of dollars there in 10, 15 stocks. But if you're living in a developing country like India, for an example, which I cover, India or China, forget about China, because China, you don't know what's going to happen. Yeah? So In India, for an example, if you are investing in India, you cannot rely on 5 and 10 kind of concentrated portfolio, because you never know how many of them will survive. There you need a larger, diverse portfolio of 20-25 stocks, that even if 2 or 3 don't perform very well or they end up in some challenge or some kind of scam which we are seeing. Look at what happened to the Yes Bank. A lot of confusion is going right now on Adani stocks. Yes Bank actually went down pretty much. There are a number of them. Satyam Computer is one of them, and you name it. If you go and look at the history, you will find that every now and then 1 or 2 good companies actually go bust because they discover some kind of goofy things there. Though SEBI has been trying to be very diligent and very hard on that, but still we are seeing once in a while this kind of thing happen. So guys, if you are an investor in Indian market, you should have a larger portfolio, 20-25 stocks. And as the portfolio grows, you see which stocks are growing, which are not growing. The companies which are not growing, sell those and add those money in the companies those are growing. And that's why over a period of time, in 3 to 4, 5 years period, you will have a solid portfolio of 20 stocks, 25 stocks like that. Again, there are plenty of small, mid cap and the large cap stocks there, and there is a different kind of growth strategies. So you have to balance all of them there. In nutshell, if you are in the advanced countries, you can go for a concentrated portfolio, but if you are not there, you can actually have to have a larger portfolio. Again, within the portfolio, you have to have different kind of segments. Whether you want to be in the auto, you want to be in the mining, you want to be in the IT, you want to be in consumer durable, consumables, up to you. The more balance you have, depending on your personal needs, do you need a dividend yielding portfolio? Then you should have those companies which are giving higher dividends. If you are very much in the early stage of your career and you are going for the growth, then you should be looking for those companies who are growing faster and not paying dividend, because you don't need the dividend. If you are a retiree, you will need dividend, guys. So all these things are important for the portfolio construction, and these guys actually don't talk about it, mainly because it's too difficult and so personal for everybody. And that's why you need to think through that. Well, my recommendation is basically you read the different methods, try to understand, look at their portfolio as well, and the whole idea is basically the more effort you put in creating the portfolio construction and asset allocation, you can be pretty fine. There are plenty of rules out there, how much you can invest in the equity, how much you can invest in the fixed assets, how much you can invest in the property. But as I mentioned earlier, this is very personal, guys. Depending on your personal situation, your risk-taking abilities and your future needs, you can play with that. And over a period of time, you will refine it. The fifth one is the most important component. Again, it links with what I talked about earlier, Neuro-finance and Neuro-investing. And the fifth mantra is learn the art of happiness and the pursuit of patience. Yes, you heard that right. Learn the art of happiness and the pursuit of patience, guys. And that's the main mantra, other than the finance acumen and everything that I talked about now so far, to adopt, learn and practice. Well, easier said than done. Remember, happiness is a state of mind. It's a choice we make. You can be happy during your physical, emotional or finance discomfort or financial or sufferings as well. At the same time, you can be very unhappy even if you get everything in the world, because you won't have peace of mind. So it's an individual choice, and that can be developed, guys. The purpose of our life is to seek happiness. It's our right to be happy. But are we? Many of us are not. If you ask yourself, for some reason or other, we are not happy, we are not satisfied. Even in the investment world, we think that, oh, there's a FOMO, fear of missing out, or something you have sold earlier, or some you have not sold, you have held on to that stock and the stock has gone down. At the end of the day, most of the investors are very unhappy. even though they are making good money. So we need to actually learn that. And that's the reason, despite Synanomics being a finance and technology channel, I spend plenty of time in the meditation, in the money meditation, in the creative visualization, in the Silva mind control method, in the how to train your subconscious mind, all those topics, because they're all related to this very important mantra, and that is how you can learn to be happy and how you can develop the pursuit of patience. I'll make a separate video on the art of happiness and maybe a series of them for your convenience. But in the meantime, if you're really interested to learn more about that, I will recommend a book, and the name is pretty much the same, The Art of Happiness by Dalai Lama and Howard Cutler. Howard Cutler actually was a psychiatrist who went along with Dalai Lama, and he actually asked plenty of questions, and based on the answers, he has actually compiled this book. And this book actually talks about how you can train your subconscious brain for happiness, why is happiness important for you, and at the same time, it actually talks about how to deal with anger, anxiety, and hatred. So all these emotions which actually create discomfort or unhappiness in our body or ourselves, actually this book talks about it, how to develop compassion and plenty of those. So that's very important, and you don't have to look around, guys. If you really look at the playlist of Synanomics, you'll actually find almost 10-15 of those videos that actually talk about how you can train your subconscious brain. The whole meditative techniques I have given, three scenes methodology, and all of them. I'll strongly recommend you to go and have a look at it. And the pursuit of patience, that's also very important, guys. What is pursuit of patience? The pursuit of patience is actually the process of accepting the time. Yes, you cannot plant a tree, a mango, a plant. You cannot just have a plant there and expect mangoes to come out the next day. The plant has to grow, it will become a tree, then only it will give you the fruits. So that's what a lot of investors say. A good investing is just watching the paint dry. So you have to be patient. And I talked about it earlier as well, the 3 key mantras in my previous videos also. Knowledge to understand and analyze the company, courage to buy, and patience to hold. Courage of conviction is very important. I've also talked about it earlier. You cannot make money with a borrowed conviction. Everybody has their own conviction. The same thing I talked about it today in the business. What is the conviction? Which business excites you? Where you think there will be a future? You have to go with that. You cannot just borrow the conviction. If everybody is buying NVIDIA, you are also buying NVIDIA without knowing what NVIDIA actually does. It's not going to help you. Well, last but not the least, I also advise many of my friends that if investment doesn't make you happy, because happiness is the essence. As I mentioned to you that, it's basically the purpose of life is to seek happiness. And if investment is not making you happy, stay away. Please don't do that. Alternatively, you can learn this art. I would prefer to learn it, right, than to live it. Because at the end of the day, we are all here not only to be happy, and happiness is very much connected with the well-being, with the wealth and the health, right? Well, let's paraphrase that. Let's summarize what we have talked about, the 5 key mantras. Number 1 was know yourself and your mental models, how your brain is wired. And that's where I talked about Neuro-finance and Neuro-investing. I will have detailed video on that later. Number 2, know your company, the business that attracts you, and their numbers. And when we talk about the numbers, the only 5 things that is important: the market capitalization, and I'm talking about in the equities space, the market cap, income, the net revenue, EPS, earning per share, free cash flow, and cash in the books. You just need to know these 5 things of the company and how they are performing quarter after quarter, and you're pretty okay. Number 3, bring new skills in your investment journey. And we talked about reading the books, getting the NLP and all those kind of things. So bring new skills, analysis, fundamental analysis and technical analysis, NLPs, reading the investment strategies of the market gurus, etc. 4th, learn asset allocation and the portfolio construction methodology. Because as I mentioned, not everybody is talking about it. And it's very personal. Depends on your personality, depends on your finance needs, your risk-taking capabilities, etc. So develop that, learn that. And 5th, last but not the least, is learn the art of happiness and the pursuit of patience. And that is the most important thing, guys. With that, happy investing. Remember, Synanomics is out there to create financial well-being for you so that you can analyze your companies, live a healthy and wealthy life, and make money. With that, if you like this kind of videos, don't forget to like, share, and subscribe. I'll come back again with another interesting video for you. Till then, it's a goodbye from your finance and life coach, Pankaj Sinha. Bye-bye.